Isn't that fancy? All right. Hello and welcome to the Rent to Own Cash Cow Formula, Module 2, which is your Rent to Own Essential Team and Marketing. And let's get right down to business. As usual, the replay will be public within the membership portal. Type your questions in the chat box or wait until the end of the segment. Make sure you mute your mic when you are outside of the question period. And go to the membership portal for replays and documents, and please protect all documents and content and refrain from sharing. All right, on today's menu, the critical rent-to-own team members. Then we'll cover property first marketing and tenant first marketing, because there are some very distinct differences to those two marketing for each strategy. And we will go into each of these team members in quite a bit of detail, but here's just the list of people you're going to need. You're going to need a realtor. And the funny thing is that you don't generally need a realtor in property first, except you kind of do for comparative market analysis and just comps in general. But yeah, usually with property first, you're avoiding realtors. But there are also cases where you might be listing on the MLS, and we'll get more into that later. And of course, tenant first, realtor is essential. Mortgage broker or banker, a credit repair specialist, 2 lawyers on your side, your accounting team, and a home inspector, an appraiser, an insurance broker, possibly a stager or designer, and of course, a painter and a handyman. Those are 2 absolutely essential members to your team. And as the saying goes, the weakest link is the strength of your chain. That's not how the saying goes, but you know what the meaning is. So the chain is only strong as the weakest link. That's the saying. And yeah, so you do need all of these team members, and they need to be ready at a moment's notice, basically. So your realtor. As I said, with property first, you don't usually use a realtor. That's one of the reasons why we're doing rent to own on a property we already own. But you may still want to list the property as for sale and rent to own. And that is often what I will do. Now, of course, I'm listing it as a private sale ideally, but there are some cases, especially if you're a little bit off of that plain vanilla that we're always going for, there are some cases where you might want to list it with a realtor on the MLS to get more exposure. So an example of this is that, remember last week I was talking about that property in Beaumont that was a few steps above a starter home, and we ended up selling that one eventually on the MLS because, I think so. Jeepers, that was long ago now. I can't remember. But we did list it on the MLS. But what we did with our realtor, and of course, we can do this because we have that relationship established where she gets loads of referrals from us, from our other aspects of our business, and she gets loads of business from us in general. So we were able to list and put right in the contract that, yeah, we are listing this for rent to own as well, and we may be canceling the contract to do a rent to own. And the thing is that when you're canceling an MLS listing to do a rent to own, you're not selling it privately right now. So there is no, you're not violating, you're not, bypassing the listing agreement. You're actually just renting it, and the person has the option to purchase. So it's not a violation of the listing agreement, but I do make sure I'm really upfront with my realtor, say, yes, in this case, I am doing for rent to own, and for sale, whichever comes first. And in fact, we just did a property where we had it listed for all 3. We had a few offers on the property, but none that I was really excited about. And in the end, we did have some interest in rent to own, but the guy was not reliable in his communication and in keeping appointments. So we decided against that, and we ended up just renting it. So a realtor can be involved. And if it's one of those, it's an my brain is not working properly today. I'm sorry. I actually do. Sometimes this happens. I had a concussion in February, and so sometimes my brain is a little bit gets ahead of itself, and I do have a bit of trouble. So it's still the great content. I'm just not best at delivering it today. So you might list full service with a realtor on the MLS if you don't need that extra cash. So in the case of that kind of sort of executive home in Beaumont, we did list it full service. And the same with this one that I was just talking about in Sherwood Park. We listed it full service. But that's when you've had the property for a while, you really just want to unload it regardless of how, and you don't need that extra cash. It's okay to say goodbye to the $15,000 or $20,000 in commission. But my favorite way is to list it with a realtor who just charges me the listing fee, and then she does it as a FSBO. So I still get the exposure of the MLS, and it only costs, last time I checked, it was $1,500 plus GST. So, and then you may be dealing with buyer's realtors commissions, but you're saving the good chunk of the seller's realtors commissions. So if you can find a realtor who will do that for you. So in my case, she's a friend who was a realtor and hated it, but she kept her license active. So she's able to do that for me, but I can't share her, sorry. Okay, and yes, so you do get more exposure on the MLS. You do have to be prepared for those realtors who will, they may be bringing a rent-to-own tenant or a buyer. I'll talk more about that in a second, but it's very, you really need to be good at negotiation, and you really need to have a thick skin, because it is amazing when a lot of realtors, not all of them, of course, but when a realtor sees that you're a for sale by owner listing, they think they can take advantage sometimes. So you've got to have a thick skin. You've got to stick to your guns. Now, when they are bringing a rent-to-own tenant, because think about it, and this has happened a lot, people get pre-approved with a bank, they go out with a realtor, they find their dream house, and then they submit the actual application. And that's only when it goes to CMHC or the other insurance companies. So when people get a pre-approval with a bank, it's only the pre-approval with the bank. It has not gone to the insurance company yet. So they could be a super strong candidate for rent to own. The bank has pre-approved them, yay, but they can't get the mortgage. So those are really awesome candidates. And now they've been working with the realtor. Now the realtor still wants to get paid because he's been working with them for weeks or months. So they might bring you a tenant. Now, of course, they should get some sort of commission or referral fee, and you can negotiate that with the realtor. The thing to remember is the house isn't sold right now. Normally what a realtor will get a commission for is the sale of a house, and they get that commission after title transfers. So that's 3 or 4 months down the road. So my view is, okay, I will give you a referral fee now, and assuming that the house sells to this tenant that you brought me and they become the buyer, then you can have the rest of your commission when title transfers to that buyer. So what you can do is set up a direction to pay so that the realtor will get their full commission once the property, a direction to pay filed on title and kept with your lawyer so that they get their commission later. And now when it comes to the commission, it's different in every province, but just to give you an idea, in Alberta, it's 7% on the first 100,000 and 3% on the balance. And then of course that's split usually 50-50 between the realtors. So that's about $8,500 for the buyer's realtor's commission on a $400,000 property. So that's what you're looking at giving up. Now in tenant first, the realtor is an absolutely key player. And of course, as mentioned, it's my realtor, not the tenants, because they need to be my eyes and ears. They're out to protect me, not just find the tenant's dream house and then forget about it. And as I said, they're the eyes and ears for potential issues. I don't recall if I mentioned this or not before, but one really good example we used, because my awesome realtor transferred to Calgary, and so we were trying a new realtor for the first time. And because remember, I don't usually see the house until after we've got the offer put on. Now, this is a personal preference, so you can definitely go out and see the house beforehand, but I'm trusting my realtor to be my eyes and ears. They say it's good. I put the offer on. I don't see the property until the home inspection. And I got into that habit because when I was doing this for the first several years, I was working all over Alberta. So I didn't bother making a visit to the property when I didn't even have an accepted offer. So only after the accepted offer and at the home inspection. So that's why I did that. But so back to this example realtor, they didn't notice that the property was on a corner of a major bus route. So buses going both ways. And when we were at the home inspection, the home inspector, thank goodness, discovered that the vibrations from being so close to this major bus route were caving in the foundation. And it was something that was really not easy to notice, which is why the home inspector was the one to see it rather than anyone else. But being on a major bus route right on the corner, that's something that would have been nice for the realtor to point out ahead of time, because that's one of those things that is a bit of a detractor. Your realtor is also going to make sure that the tenant sticks to the budget. So for example, if you are approving your tenant for a maximum budget of 400,000, well, it makes sense they could be looking in the, say, 425 range, because you're going to negotiate down. But you don't want to be looking at 450 or 475 when they're only approved for 400. There we go. And plain vanilla, of course, you want your realtor to keep their eyes open for anything odd or weird about the property, anything that's not going to have mass appeal. Your mortgage broker, and we'll get to the home inspection more later. The mortgage broker or banker, of course, they're going to later get financing for our clients. So that's because, so in tenant first, we're using a mortgage broker or banker, but that's not really what I'm talking about. I'm talking about a mortgage broker or banker to get financing for our tenants when they're ready to buy. That has to be a critical team member, because not everyone can do it. Trust me on that. So they need to be able to handle a rent to own presentation to application and present that to their underwriters. Now, brokers and bankers have different rules. The broker channel has more limitations than the banking channel. So if you are dealing directly with TD Bank, they're going to have different things that they can do. RBC is actually, I think RBC doesn't even go through the broker channel. They only go through the banking channel. So that's a bad example. But yeah, there's a lot of different things. Like, for instance, the number of properties that when I was going through the broker channel, I was having trouble getting a mortgage because of the number of properties I had. Whereas through the bank directly, I had no issues. So there are definitely differences. And what I have found is that it's easier to deal directly with the bank, especially for tenant buyers. I did at one time have a mortgage broker who was exceptional at getting our tenant buyers approved. But since then, I have had nothing but trouble with brokers. And option money and proof of down payment. Oh my goodness, I'm drawing a blank as to what that's about. Okay. Oh, the option money. Yeah. So with the purchase, when you're eventually selling to the tenant buyer, where the option money goes for proof of down payment is very important. And again, it's different between the broker channel and the banker channel. Now, what I found a few years ago, there were a lot of brokers who were having difficulty with the proof of down payment and needing it to be in a trust account for the 3 months prior to the purchase. Whereas when I was dealing directly with my mortgage specialist, I was able to keep the option money in trust within our own corporation. So it's we wrote right on the purchase agreement where it says purchase deposit will be held in trust by, and then there's a blank. Well, it's QD HomeQuest Incorporated, and we were able to hold our own payment rather than having to have it in trust with a lawyer. But what I've heard is when they're dealing with a broker, that money has to be in trust with a lawyer for 3 months ahead of time. And that was the only way, a couple of years ago, at least, that these deals were getting done through brokers. And in some cases, the brokers were suggesting that you set up a joint bank account with the tenant and the money stays there. And of course, the money can't be withdrawn by the tenant, but that's just a whole lot of hassle. So what I've found is that it's easier to go through the banking channel directly. And yeah, so brokers do often deal with simpler mortgage applications. So the first-time home buyers that are just plain vanilla. And they have to know how to present it to underwriters. So whether you're dealing with the bank or directly or a broker, they really need to know how to present this deal, because especially if you're getting option payments monthly instead of all up front. And some banks don't even work with rent to own. In one case, we worked with, and this is more so the smaller banks. The big five, they're big five. The big banks, they're pretty much okay with rent to own. And it should even be better now, because rent to own is becoming a recognized program for home affordability, and the government and CMHC have a program now that is a builder channel for doing rent to own. So it is becoming more and more widely acceptable with the affordability crisis that we have, at least in Canada. So rent to own is becoming a normal thing and an easy approach for people to take. So this all could be changing, but I haven't worked with the smaller banks for my clients for quite some time. Now, at the time, this one bank couldn't do rent to own. They absolutely wouldn't touch it, except in this case, they would, because it was only one big lump sum option payment right from the outset, and there were no monthly option payments. So they basically considered it a purchase with a really long closing, and just forgot about the fact that it was, pushed aside the fact that it was originally a rent to own. So that's something to keep in mind when you're setting up your deals with your tenants. If it's at all possible to get the big option payment up front and not require anything monthly, that is the best chance that they're going to have of being able to qualify. But if that's not going to work, it's still, and they do need monthly, there are still lots of options. And your banker or broker must be able to deal with bruised credit. A lot of people have trouble placing mortgage clients because they don't know how to work with somebody who's got a credit score of less than 700. So some people specialize in the 650 to 700 range, and some people just really don't know how to do it. Okay, now my banker is a mobile mortgage specialist. So when I say I'm dealing directly with the bank, I'm not dealing at the branch. I deal with a mortgage specialist. That's her only job, is getting mortgages. She doesn't work at the branch at all. She only does mortgages. So if you're dealing at the bank level at the branch, that person might be doing RSPs and mortgages and car loans and setting up accounts and everything else. That's not who we want to deal with. We want to find a mobile mortgage specialist, or whatever your bank calls it, who just deals with mortgages. That's going to be the best member of your team. And in my case, she is able, because she's mobile, she's able to do files from right across the province. So as opposed to when you deal at the branch level, you have to deal at that particular branch, and you're usually dealing with the one that is closest. So the mobile specialist is great. Everything's done over fax and email and that. And so you do want to screen your mortgage specialist. You want to ask them, have you worked with rent to own before? How many have you done and that you've actually got financed? Are you limited to a certain region, or can they work right across the province? And working across the province is important if you're doing tenant first rent to own, because what I've found, because with tenant first, because I was always going for the cream of the crop in tenants, I didn't want to limit myself geographically. And that's why I was doing them right across the province. So picking the best tenants in Medicine Hat and Fort McMurray and Grand Prairie and Calgary and goodness, a few other places as well. So that's why it's good to have somebody who's not limited. Do they have experience working with bruised credit? What's their success rate there? Now, credit repair specialist, remember, my ideal tenant doesn't need a credit repair specialist. I want to work with the cream of the crop. I want to work with people who've already done their homework, who've already paid off their collections, who've paid down their debts, who have done everything that they need to do. And now all they have to do is wait or pay down their debt a little bit more. So they need to have good credit habits, like using their credit card every month and paying it on time, and keeping a low debt ratio. We'll talk about this more later, but you want to aim for having your credit cards and revolving lines at a maximum of 30% of the limit. So that sort of thing, that they've already got these good habits or they're close to it and they just need a little bit of tweaking. And then what we need to do is just simple, regular checkups with the tenant. And, they pull their credit report. We don't pull it. We get them to pull it so that it's not a hit. It's not a hard inquiry. So we get them to pull it periodically. I suggest at least every 6 months. It depends how long your rent to own is, just so you can check up on their debt coverage ratio and their timely payments, and the fact and if they're shopping for new debt. So the one, I don't know if you recall me telling you in one of the webinars about the tenant who just kept spending his down payment and little Johnny needed braces and all of these other things. Well, they were constantly shopping for more credit, and it was just a nightmare. So pulling that credit report tells you, oh, there was an inquiry at Scotia Auto Finance. Really? You're buying a new car right before you try to buy a new house. Not the smartest idea. And when you have a client who only needs a little bit of tweaking in their credit habits, then your mortgage broker or banker can usually help. And of course, because I'm referring all of my clients to get their mortgages from this mortgage specialist, she's happy to review the file even before we approve the client. Sometimes I've had a couple files cross my desk where it's just, I'm really not sure about how long this person is going to need. Hey, Jenny, can you have a look at this? And she'll have a look, and then we can discuss what, with the tenant's permission, of course, for it to be reviewed. Now, some rental operators prefer working with people with bad credit. I would use extreme caution if you are going to work with people with bad credit, because we want to ensure that we are making our best effort to set up the tenants for success. So bringing somebody into your program with terrible credit habits, you're not setting them up for success. But that's where a credit repair specialist comes in. If you are working with applicants with bad credit and bad credit habits, then you should require that they get some sort of counseling or some sort of guidance. And that is covering your butt, because you are, again, setting them up for success, and you're not putting somebody in a position where they're never going to qualify, or it's the appearance of you putting somebody in the position where, yeah, I know they're never going to qualify. They've got terrible credit, but eventually they'll move and we'll do it all over again. You don't want to get into the appearance of that, because that is a predatory practice. And several years ago, goodness, it had to be at least 5 years ago, I read an article on exactly this, that somebody out in Ontario was approving people for rent to own they knew they had no chance of qualifying. It was just a lather, rinse, repeat, take the option money, then they get kicked out. He does it all again. And it gave rent to own a bad name for a really long time. So that's not something we want to go back to. Now, there is a difference between paid and free credit counseling. So people tend to not value something that is free. So if you want people to do it, it's more of a mental commitment to something if they have paid for it, and then they have mentally committed to doing it. And so with a lot of people, a paid program is better. However, in Alberta, we have a program called Money Mentors, and it is the only government-funded, not-for-profit credit counseling service in the province. So you can go in there and have a meeting with them, and they do up a credit improvement roadmap, the whole bit. So there is free counseling available, and I don't know what kind of process they're committing to or what's involved in this, but that is definitely one possibility. And quite possibly other provinces have a similar program. But otherwise, there are some mortgage brokers who do have paid credit improvement programs as well. At least here in Alberta, I know of a couple. So there are a lot of options. And again, if you're working with somebody with bad credit, you should make it a requirement and put it right in the contract that they are required to attend X many credit counseling or whatever the case may be. Lawyers. You do need to. You need your lawyer to complete the purchase and sale transaction. And so that's when you're doing tenant first, of course, you're buying the property now, but then also when you're selling to the tenant, you need to have your lawyer to complete that sale. And the second lawyer is to refer your applicants to for review. And then later, when they do the purchase from you, they could use that same lawyer potentially. But we want to always advise our applicants to take the contracts to independent legal counsel to have them reviewed. And whether they do it or not, we'll talk about that in a second here, but we always want to advise them of that to make sure that they are clear on all their rights, responsibilities, and obligations and consequences in all of the contracts. And what we do is we send them with draft versions or blank versions of all of the contracts. I don't send it with the numbers filled in because that's not what the lawyer is advising on. The lawyer is advising on the terms themselves to make sure that the tenant understands what they're getting into. So we give them all of those drafts and then blank drafts, and then a certificate of independent legal advice, which is just a little piece of paper that the lawyer signs and says, yeah, on November 16th, I advised Joe and Joanna Smith about these rent-to-own contracts, and I explained this all to them. And that's all that CILA is. Now, if they don't want to go to a lawyer and pay a lawyer, because of course it'll cost money, and I don't even know how much, but probably at least $400, at least an hour, right, for the lawyer to review. And if they don't want to do that, you could make it a requirement of your program for doing tenant first that they have to go and see a lawyer. But if you're unloading a property with property first, you just really want to find somebody good and get rid of this property. So if them going to see a lawyer is the only hang up, then you have two choices: either pay for the lawyer yourself, which is definitely a possibility. It's not a very big cost in the grand scheme of things, or you can just let them not see a lawyer. But the important thing is that you have advised them they should see a lawyer. So when we get to the contracts session later in a couple weeks, you will see in my option disclosure right at the top, it says the tenant has been advised to seek independent legal counsel regarding these contracts, and they have to initial it. So that way there's nobody able to say, I had no idea I should go see a lawyer. I was so confused. So that covers our butts. And now the lawyer, the reason we want a lawyer that we recommend, a lawyer on our side in this, is because they have to understand all of this. If you're sending someone to a lawyer who's not familiar with rent to own, and for example, the fact that option payments are non-refundable, and if the tenant walks away, they don't get those back. They walk away from all their option money. That's standard in rent to own. That is standard across the board and pretty much across the country. Anything different would be weird. So if the lawyer is looking at that and he's not familiar with the fact that that's standard, he might say to your clients, oh my goodness, did you know that you could lose all your money if you walk away? And he might scare them off. And I've had that happen before. The lawyer was not familiar with rent to own. He read all these terms and he scared away my client. And this is a standard rent to own contract. So it's, yeah, you definitely need somebody who can understand those, knows what's standard, and can advise the client accordingly. And it's important to know too that they are not offering opinions, not supposed to offer opinions on whether or not the person should do it, whether or not it's a good deal. They just are, it's their job to make sure that the client understands what they're getting into, not to say, wow, this is really dumb, you shouldn't do this. So that's why you want your own preferred lawyer. Your accounting team. The handling of option payments can be a confusing thing. It can be counted as either income or current liability, and there is an argument for both. And I have actually talked to right up to the top brass at the CRA as far as how to handle this. And the bottom line is there's arguments for both, but it is safest to count it as income when it's received. The only exception is the small amount that is refundable. So this is the way I do it, because according to the CMHC, there has to be a reasonable portion, and that's the amount, reasonable portion of the option payments that are refundable if the tenant applies for financing and can't get it and then decides to walk away. So they haven't just walked away from the deal. They tried to close and they couldn't. And they decided, if this is hopeless, let's just cut our losses. So in that case only, there is a refundable portion, and that has to be written in your contract, that what amount is refundable. So that amount that is refundable is something that I may not get to keep. So that is more like a deposit. So it is counted as a current liability. Everything else, and if you're wondering, mine is 20% of the initial option payment. So in a lot of cases, it's only $2,000. And so I have $2,000 as a current liability. The rest is income when I receive it. That is the safest way to go. Excuse me. Active versus passive income. When you're doing a rent to own, it is basically a long-term flip, because you have this property. So we're talking tenant first rent to own at least. It's a long-term flip. You are buying this property with the intention of selling it. Now, if it's property first, that's something to talk to your tax accountant about, because whether or not you need to have a change of use, I don't think you do. I think you would just count it still as regular rental income. But excuse me, well, in our case, we just continue counting it however we were counting it before. So if this is a rental property that we decided to change into a rent to own, it's already in the books as a rental property, so we just keep it that way. If we bought the property with the intention of selling it as a rent to own, which is most often the case, then it is active income. It's a long-term flip. And it depends what your intention is. That's the CRA bases a lot on your intention, but you also have to be able to prove your intention. So anyway, when it's a flip, it's active income, not passive rental income. So that brings up a lot of questions, because if you are yeah, it is taxed very differently. So, and I know nothing about exactly how it's taxed. That is my accountant's job. I just make sure he has accurate books given to him. Now, the other thing with rent-to-own properties as flips, they are proceeds of sale. The proceeds of sale are income and not capital gains. So your proceeds of sale are taxed differently as well. Now, with capital gains, of course, you get taxed on half of the gain and it's one tax rate, whereas with when it's income, you're taxed at a different tax rate. So this brings us up to, oh, sorry, we'll talk about incorporation in a second. And if there is a change of use, that's another accounting question to be aware of. So if you are changing it, as I mentioned, from a rental to a rent to own, I would just leave it as the same, leave it as the same taxes. But because it's still a rental all the way along, and then you're selling it. So I would just leave it treated the same way, and it can then be capital gains. But if you want to talk to your accountant to see if you should switch it to do a change of use, then that might be a good idea. But we just leave it the same. But if you're taking a personal property that was not a rental and you're putting it into a rent to own, so for instance, well, this house that I live in now, eventually, when I go to sell it, I might do a rent to own on it. It would make a great rent to own. So when there's that change of use, then you have to have a starting point. You have to have an accounting basis. And so you would want to get a home appraiser in to establish value, because at least at the current time, your gains on your personal residence are not taxable. So you want to establish that this much was of the value increase was before it became a rental or a rent to own, and this is the only amount after that that's taxable. Taxes, aren't we excited? Incorporation is a huge question for every rental housing provider, but even more so with rent to own, because it is active income. So if you are doing a lot of these, then you might want to consider incorporating. And when you incorporate, you have a lower small business tax rate for active income. So when we had done, I think I was on my second, yes, it was. I was on my second rent to own, and I decided, no, this is too good. I'm going to do lots of these, and I want to take advantage of the active income, the lower small business tax rate on active income. So we incorporated to do that. And there are huge benefits to that, because it's the same tax rate regardless of what your income is. Really important for rent to own, because one year I might sell 5 properties to tenants. Another year I might sell 0. So in that year that I sell 5, that if I had them in my personal name, that would kick me up into the top tax bracket for that year, and a huge chunk of my profits would be taxed away. But because I'm in the corporation, it doesn't matter what the corporation makes, I still pay the same rate of taxes, which is something like 14%. So it's super low. So yeah, if you're going to do a lot of these, definitely consider incorporation. And then of course, so the other thing is I get taxed at the low business corporate tax rate for everything that happens in the corporation. And with the lower taxes, I hold on to more. I keep that in the corporation, reinvest it, yay. And then I get taxed again personally when I take money out is in the form of either salary or dividends. But I can choose when I do that. So yeah, you have the flexibility of choosing, okay, am I gonna take out a whole bunch of money this year or next year or whatever. So you can control your personal taxes by deciding how much of your how much income you're going to claim from your corporation. And now to get really technical, whether or not the money actually comes out doesn't matter. There's your accountant will claim your dividends, and it could just be basically sitting in your company as a shareholder loan, and you still keep the money in and reinvest it. So there's huge tax strategy involved in doing this, and it's all through having the corporation. So definitely it's something you have to discuss. And of course, you need to talk to a tax accountant who specializes in real estate investing, as well as an incorporation lawyer to decide whether it's right for you to incorporate, because every person's situation is different. But yeah, if you're ever going to incorporate in real estate, when you're doing active income, that would be the time to do it. Now, the appraiser. In Property First, you don't have to get an appraisal done. You just sell the property for the most you can sell the property for. But you may want to get an appraisal done just so you can give your tenant buyer confidence that, yes, we are, so this is the buy now price, this is the today price. And in my ads, I put it as the buy now price in quotes. So if the house is worth 400,000 today, the buy now price is 400,000. Final price and terms will be decided based on your unique needs and situation. So yeah, I'm just going based on, I might be going based on the comparative market analysis or comparables that I've had pulled or whatever, but you can get the appraisal done. It's only a couple $100, and then you have that document that gives your tenant buyer confidence in your starting price. And yes, and you would show it to the tenant. Now, what's more important in using an appraiser is to get the market rent analysis, because there are some lenders out there who, as far as proof of down payment goes, they want to make sure that you were charging fair market rent, and then only what's above fair market rent can go to proof of down payment, can go to their down payment and fall within the rules of proof of down payment. So it's a really good idea to get a fair market rent analysis done by a professional appraiser, so that you can prove to the banks that, yes, here's what the rent was, and then we were charging this much above it. Now, at this time, it is not a requirement, but that can change. Banks can change their minds at any time. So it's a good idea to just do it. And but either way, you do need to have proof of fair market rent. So you can also just pull a bunch of similar ads. And so this is the very least you should be doing. Pull a bunch of similar ads to establish, yeah, this is a similar property, and here's 5 properties, and here's the range of rents. So definitely do that, but it's a good idea to get that professional appraisal for rents. So then you might as well get the whole thing. And I think altogether with the property appraisal and the fair market rent analysis, it's around $400. And as I mentioned, when you're changing use from a personal to a rental or rent to own, then you want to have an appraisal done to establish fair market value. And also, as I said, personal property is tax exempt before it becomes a rental. So any of those gains are tax exempt. And of course, rental property is capital gains. And so rental property is capital gains and passive income. And then if you're switching it to a rent to own, you could potentially switch it to be active income. But as I've said, that's complicated, and I don't think it's necessary. The home inspector. So in Tenant First, it is the tenant's responsibility to get the home inspector, to get the home inspection done. So they are choosing the home inspector, hiring the home inspector. Yes, they do need to attend the inspection, and they're paying the bill. The reason why it's the tenant's responsibility is because it helps, paying for that home helps to get them into the mentality of home ownership. And it's a mental and financial commitment towards the whole process. So they feel invested in the process. And more importantly, they know what they're getting into. So the home inspection, maybe it says, oh, this furnace is 30 years old, so it is past its normal life expectancy. Well, now we know there's the potential for the furnace to kick it at any time. It could be the day after closing and the furnace doesn't kick in and it's the middle of winter. So it's really important the tenant knows what they're getting into and that we have that discussion. So we get a copy of the, as the actual buyer on title, we get a copy of the inspection. I go through it. I'm not going to trust that the tenant will go through and catch everything. We make sure we go through it, make our list of points of discussion, and then discuss with the tenant buyer, okay, here's what we're getting into with this. Are you prepared for this? And have an email trail of your conversations to email at the very least, but you could even put it in writing that the tenant understands that the furnace is 30 years old and could die at any moment, and that's their responsibility. So have at the very least an email trail discussing, okay, here are the issues that came up in the property inspection. Now, of course, some of them you're going to try to negotiate a reduction in price or to have fixed before possession. But in some cases, like with a 30-year-old furnace, that's not going to happen. It's going to just be a potential issue. So we want to make sure that that's covered with the tenant. And I always recommend the inspector that I've used. First of all, they have 2 inspectors at every call, so it takes half the time, which is awesome, and also 2 sets of eyes. And I get a discount with those inspectors too. And it's only $50, but hey, if $50 saved for the tenant, that's great. And I love that it's only half the time. So it's 2 hours instead of 4. And with Property First, your tenant may want to inspect the property. You'll find that most people, they kind of still walk in with a renter's mentality, and they walk in, they look at the property, they think, oh yeah, this is nice, and then they agree to a rent to own, which surprises me because, you know, you're buying the property at some point, don't you want to inspect it? So I always let them know that, yeah, of course you can hire an inspector if you'd like to, but at some point I have had an inspection done on the property, so I'm still going to have that in my file. So at the very least, if they don't want to inspect the property, I can offer to give them the original copy of the inspection and just make note of, yeah, this like a little checklist of here's all the things that have been fixed that were issues with the property. Your insurance broker is, of course, a critical part of the team. We want to always make sure with all of our rentals that it's a rental property policy. Those offer very different protections. And of course, that's also important if you're changing use, you want to switch from an owner-occupied property to a rental property policy. With our rental property policy, we have, because it's under a corporate umbrella, it's way better than most rental property policies. So if you don't already have one, you should definitely look at getting one. And we have flood coverage, we have tenant vandalism coverage for, I believe, $25,000. And also vacancy coverage, because a lot of policies, and this is hidden in the little fine print, if the unit is vacant, then some policies after a certain time don't cover anything. So the policy that we have is even if the place is vacant for a month or whatever, and maybe because you're doing renovations, maybe because you're just having trouble finding the right tenant buyer. But yeah, in a rent to own, Property First rent to own, your property could be vacant for easily 2 months or more. So you want to make sure your vacancy coverage is good. Lost revenue if there's a major loss on the property. So the standard on my policy is 1 year. You can have up to 2 years of, so that's replacement income. If there's a major fire or flood or something like that that makes the property unlivable, then while you're rebuilding, you get paid the lost revenue. And when you're doing an agreement for sale, seller finance purchase, so you're not on mortgage and title, then your insurance broker is really important because you want them to be able to have you own the insurance policy and have the seller who's still on title as the additional loss payable. And I mention this because often when we do rent to owns, it's because we've got this property on seller financing agreement for sale. Now, if you're wondering, my insurance broker is, the policy is through Peace Hills. And the policy we used to have, I can't remember who the insurance company was. But yeah, our current policy is through Peace Hills. The broker I use is Sadler Insurance. Steve Hambley's been fantastic for us for many, many years. And believe he can work with properties across Canada, I believe. So it's not, I'm not 100% sure on that, but definitely Peace Hills corporate rental policy. And if you do talk to Steve, tell him I sent you, and my favorite color is red. All right, any questions so far? Nope. Okay. Just a lot of confused looks. All right, now on to marketing. With property first marketing, it's a little bit different than tenant first, because with property first, of course, you already have the property, you're trying to market that property. With tenant first, the tenant finds the property and you're marketing to find the tenant. So property first, you want to, of course, a better looking property is going to sell faster. You're going to find that tenant buyer faster, and you're going to be able to get more money for it. So what you want to do is do a thorough walkthrough and look for any potential issues, any little things, like, for instance, missing house numbers, or cracks in the vinyl siding, or even light bulbs not matching. That's one of my pet peeves, when you have 3 yellow light bulbs and 3 white, and it just looks off. And I say walk through with a friend because we don't see our own dirt. And I'll give you a rather gross example. I was at games night with some friends at one of their houses. This was a couple years ago. And everything looked great. The house was, I think it was around Christmas, so the house was decorated and lovely food, great company. We had such a good time. And then I go into the guest bathroom, and it was disgusting. There was gunk all over the soap. There was gunk all over everything. There's hair in the sink. It was so gross. And all I could think of is, really, this is your guest bathroom that is there for everyone to see, and you're okay with this impression that you're giving. So people don't see their own dirt. So when you are doing your walkthrough with your to-do list, and actually one good person to walk through with would be your handyman, because they're the ones going to have to fix it anyway. Now, here's an example. This is one of my rentals. It's just an older suited house in Edmonton. And so it's got these 2 pillars, and there's mailbox A and mailbox B for the 2 suites. And both the mailboxes were looking like this. And one day I walked up, did one of my semi-annual inspections of the property, and this just really struck my eye. It looked terrible. So we replaced the mailboxes, and it just makes such a difference, and it's such a little thing. So yeah, you want to do a thorough walkthrough, give that good curb appeal, that good first impression. No scungy sinks. So you want to do all the small repairs or changes, like these mailboxes and the house numbers and the light bulbs and all that sort of thing. And then, oh shoot, I didn't get the other picture. Darn it. I was supposed to go to our Sherwood Park property today and take the after picture, because I realized I didn't have one, and we didn't make it today because the handyman hurt his back, so we rescheduled. But you do want to consider some upgrades. So this is the before picture of this property, and the after picture has the railing removed, the flooring replaced to something not ugly yellow oak, and a fresh repaint of the walls, and a new light fixture at the entry, because you can't see in the picture, but when somebody was moving furniture, they bent the light over and it looks terrible. So it just, taking out this railing really opened it up. The flooring was so old and tired. And I mean, replacing flooring is expensive, but in some cases, to get that appeal, you just need to get it done. So the important thing to consider: paint is an obvious first choice. Flooring, of course, especially if you have carpet in there. Cabinets, you don't need to replace cabinets. Often you can either reface them or have them professionally repainted. And in some cases, it's a spray-on enamel, and it's stunning. So at a fraction of the cost of replacing. So you have options. And important to remember to match your market. There's no point putting granite countertops in a starter home. And I mean, if all the starter homes on the block have granite countertops, then yes, you should. But if everything else is more of a laminate countertop house, then there's no need to put in granite countertops. So that's where most people spend money they don't need to, is those granite countertops, because it's not the norm everywhere. Now with property first marketing, the first thing you need to do is declutter. And I say this because often your property will be vacant, but not always. Sometimes you have just a regular tenant in there, or perhaps it's a failed rent to own where the tenant knows that, well, they're going to have to move, but if we can sell the property really fast for good money, then they might get some of their option payment back. So we had one, the lady I was talking about before the session here, the seniors town half duplex in Spruce Grove. Man, that lady kept the place like a show home for us, and we were able to do showings. It was absolutely stunning, and we were able to do the showings while they were still living there. So if you do have somebody in the property, make sure you declutter, because people need to see how they fit into a space. And if you have, for instance, if you have a storage room that is absolutely packed wall to wall with stuff, people are going to have trouble picturing themselves fitting into that space. So, and a bookshelf, another good example. If you have a bookshelf that is just solid books, take out 2/3 of those books, put in a couple of little statues or knickknacks, and now people can see how they will fit in physically and mentally into this property. It's a mental trick. And you want people to remove personal items like family photos, for example, and replace with something neutral. So a lot of people, for instance, have going up the stairs, they have the kindergarten right up through grade 12 graduation photos on the wall. You might just want to ask them to pack those away and get flowers and butterflies or mountains or something. And it can be the furnished suite that we have. I got some decor items from JYSK, I think it is, and it was pictures of zebras, and they're just lovely neutral pictures. And oh, and then another room we did as ships, so it's coastline stuff. So lovely neutral pictures. They were and gallery wrap, so they look nice, but they were super cheap. Staging. You often are not going to stage a property first property, but in a few cases, like with this one here in the picture, we did. This is a property. It's not executive, but it's definitely a couple steps above a starter home. And so it's another one where we were listing it for sale, for rent, or rent to own. And to appeal to the for sale and compete with the for sale side of it, we've felt the need to stage it. So with staging, you can either do professional or do it yourself or virtual. Professional is expensive, of course, and you have the payment up front, and then if it doesn't sell within X amount of time, then there's a monthly payment as well. You can do it yourself if you have, go to JYSK and buy a bunch of little things. And it can be done virtually as well. The problem with virtual, the companies are getting way better, but I remember seeing about 2 years ago, there was this listing online, and the virtual staging was so terrible. They had put a bed in one of the bedrooms, and the bed looked like it was about twice as big as it should have been. So they had their sizing off, and it made the room look like a closet. So virtual staging is some of it's excellent, and you can't even tell it's virtual, and some is terrible. But more importantly, once the person gets to the property, it's empty. So it just doesn't make sense to people. So I tend to not use virtual staging. Now, you also don't need to stage the full place. You might find that most people pay the most attention to kitchens and bathrooms. So, for instance, you might have a little wine rack, uh, one thing I would do is have a big clear vase with fake lemons in it. So just little touches that make it homier. And you can get just cheap but pretty soap dispensers for the bathroom. Now with the towels, you want nice fluffy towels, good quality towels. But yeah, those little items are often enough, just kitchen and bathroom, just to have people feel a little bit more at home. And so that's a really partial staging. Then you also might want to do things like this with the couple of sculptures and a bit of art to just make it feel to you're trying to create an emotional appeal. You're trying to create somebody feeling like they live there. But yeah, and then you can also do partial staging with furniture. This is usually done professionally, but I mean, if you're doing a lot of these, you might end up with a storage room full of furniture. But yeah, you don't need to stage the whole house. You can just do the living room, the kitchen, the bathroom. So that's only a few pieces of furniture, and it'll reduce your cost dramatically by only doing the main living area of the house. Professional photos and a video tour. That is some of the best money that you're going to spend. And the nice thing is when you get the professional photos done and the video tour, so that's that artsy walkthrough that you see on a lot of realtor listings. First of all, they're not that expensive. Secondly, you can often get the measurements included for not much more. So if you ever think you might need to list on the MLS, then you need those measurements done. And yeah, the big thing is I have all the proper camera equipment, the lenses, the flashes, but the one thing I don't have, actually the two things I don't have, the good editing software. I can't do the video myself, so I'm only talking about the photos, because yeah, the video that they do is amazing and not shaky, and it's not at all like what I would do if I was walking through taking a video. So, but with the photos, I have all the equipment, but I don't have the editing software. And I also don't have the time that I want to spend doing it. And for the price that you pay for professional photos, the results you get back are stunning. So, for example, at one property, I took a picture with my camera, edited it the best I could. Oh, it was one with actually this shows it a bit. It's not this property, but this is a good example. The fireplace here, that's how it looks in real life. But in the photo that I took, that yellow oak comes out so yellow and so intense and so gaudy. And the property in question, actually, I have a picture of it in a minute here. The property in question, the whole floor was yellow oak. So I took this photo, and I could not seem to get rid of the yellowness of the oak, and it just made the whole thing look terrible. Now, once we hired the professional photographer, funny thing is he took the exact same picture from the exact same angle, but his edited version was beautiful. He took that intense yellow out of the picture and made it look more like real life, because it wasn't a disgusting yellow in real life, but it sure was in the photo. And he fixed that up, and it just was a night and day difference. So definitely professional. And you can also add a 3D walkthrough. Those are only valid for 3 months because you can't download those. The video walkthrough, the video tour you can, but the 3D walkthrough, they're really cool. It's like you have Google Maps inside your house. So there you can push a little dot and it'll take you forward, and you can look around and it gives you all the measurements. They're fantastic, but they live online, and you get them for 3 months. And then if you need them for longer, then it's an extra, whatever, $50 a month. I can't remember. For writing ads, we want attention-grabbing headlines. So for instance, one of my rental ads is 4 out of 5 dentists agree this should be your new home. So something that grabs attention, not just 3-bedroom, 2-bathroom, double car garage in Southwest Edmonton. That is not an attention-grabbing ad. Our headline. And again, we're looking to create emotional appeal. Just like when we're doing a bit of staging or decluttering, we want to create emotional appeal with our ads to have people thinking about their life in that property. And we want to focus on benefits rather than features. So the fact that it's a 3-bedroom, 2-bathroom, double car garage is a feature. The fact that that double car garage will keep your car nice and cool in the summer and you don't have to scrape windows in the winter, that's a benefit. So here's an ad I found a while back that is all focused on features. Stunning luxury home in Spicewood. Plenty of privacy found in this single-story waterfront home with amazing Texas sunsets overlooking manicured golf course and the hills beyond. Courtyard, pool, spa, outdoor kitchen, gorgeous patio, fireplace, fabulous finishes such as native stone. That's all just listing features. You want to focus on the benefits to really draw people in. So what does that beautiful view and the big patio with the fireplace mean? It means you can relax with a gorgeous view as you sip your coffee every evening watching the sunset. And that's an emotional appeal. So here is, so here's the one of the ads I wrote for that Beaumont home. This immaculate and impressive Beaumont home is exactly what you've been waiting for. That's also important, is to put them directly in the ad by speaking about it from their point of view. Your guests will be impressed when they set foot into the stunning front living room with vaulted ceiling opening to the upper loft. Your connected formal dining area is luxurious and welcoming. Enter the gourmet kitchen and imagine entertaining in this glorious space, complete with maple cabinetry, granite countertops, blah, blah, blah. So yes, I'm mentioning the features, but I'm attaching a benefit to them. People imagining entertaining their friends and their friends being so impressed at this glorious space. And here's that photo I was telling you about. So this is the home in Beaumont. It is staged because we did list it on both MLS and rent-to-own. And here's that yellow oak floor that looked so terrible in the photos I took, and it basically ruined the look of the home online. Oh, and here's my ad for headline. Stop, this is the drop dead gorgeous home you've waited for. So I like to write headlines. This is a lovely photo of that place, and it's a perfect example of what you could do with staging, because this accent wall here is a real highlight of the home. It's every person commented on it, and every person commented on the photo of it too. So this is something you could do with a couple lights and a few little pieces of art to really set this off. You don't even need the furniture. So little staging items can make a big difference. Now, with Property First Marketing for placement, we put ads, I had put them in rent board until very recently. Rent board, one nice thing is that you can get a yearly membership with them. And so if you're placing a lot of ads, then it's really worthwhile. But I found that recently they weren't getting a lot of traction. And that's one challenge, is that it's up and down. For instance, with Kijiji, we used to use Kijiji all the time, but then there were so many cases of fraud that people just stopped using Kijiji. So I'll still put an ad on Kijiji, but I won't spend the money to bump it or promote it. Facebook Marketplace is, Rent Faster, I should mention first. Rent Faster does have a section for rent to own, but when I was in it the other day, I found that the filter wasn't really working. So I'm not sure if that's still, the filter itself of rent to own is still viable. But yes, I do sometimes place paid ads on rental sites. Facebook Marketplace is fantastic, at least in Alberta. That seems to be the way to go for marketing. And then the nice thing is you can also cross-post quite easily to all of the Facebook groups. So you want to go into all the groups, search up real estate rentals, whatever terms, and join for that area. So for example, with the Beaumont home, that's just south of Edmonton. So I made sure that I was in the Leduc area, which is a little bit over here from Beaumont, made sure I was in that group, all the South Edmonton groups, the Edmonton and area groups, and then, and even Alberta rental listings in general. And then of course, if there's any rent to own groups, like the one I have for Alberta, then make sure that I'm joined into those. Then when I place my Facebook Marketplace ad, I can cross post to all of the other groups as well. And when I'm doing rent to own, I put it in both for sale groups and for rent groups, and it's just a slightly different ad. So in the for rent ad, it'll be of course it'll show the $2,500 a month rent, and then in the bottom of my description I'll say the buy now price of this home is $400,000. Final price and terms will be decided based on your unique needs and situation. In the for sale ads, I'm going to say, okay, it's a buy now price of 400,000 is going to be listed at the top. And again, the term of final price and terms will be decided, and monthly rent is $2,500. So yeah, I put it in both. And as far as bumping ads go, because they only stay at the top and relevant for a few days, and then they get pushed down. So you can go into each of the individual groups and put a little period as a comment on your ad, and then that'll bump it up to the top as soon as you've said something on it. And periodically, because it'll also say at the top when it was listed. So after, say, a month of being listed, you will want to take your ad copy it over to Word or something, and delete your ads completely and repost completely. And keep in mind, just 1 second, Art. Keep in mind that when you're posting in Facebook groups, some people will make comments on the listing itself rather than messaging you. And also some people, when they message you, it'll come through as a message request. So it's something that you need to keep an eye on. And all right. Any questions?
Yeah, how about paid bumping? Is that worth it or not?
On Facebook Market,
as a generality,
on Facebook Marketplace, you mean?
Well, yeah, I mean, that is the most popular, isn't it?
Yeah. I haven't done that simply because that doesn't affect any of the other groups that I'm cross-posting in. So I tend to just delete the ad completely, delete it from all the groups, and redo it so that it's fresh at the top in all of the groups. But I mean, that could change too, because when I first started doing property first rent to own, the Facebook Marketplace was just starting up. So it was strictly through groups, and now it's really pivoted, and then Facebook Marketplace came up, but you still had to post it separately in the groups. And now you can post in Marketplace and just click a button to cross post in all the groups. So all of these things are changing all the time. And if you come back 2 years from now and watch this video, you might think that's not right, because it does change a lot. So I haven't used bumping because, as I said, I do prefer to just delete it and start again at this point. But I don't even know how much it is to bump a Facebook Marketplace ad. I know you can renew the listing after a certain amount of time, and that's free. But again, that only renews the listing on Facebook Marketplace. All right, good to go? Okay. So for tenant first marketing, I have usually posted an ad in the rental sites, and it's something like, why rent when you can own? And we'll talk about the ad copy in a second. You can have a Facebook page that is dedicated to that sort of marketing, to finding tenant buyers. You can use pay-per-click ads, which I used extensively. I have not done Facebook pay-per-click ads for tenant first rent to own because I'm still learning how to get Facebook paid ads to my target audience. Yeah, I'm still working on that. But Google ads I've used extensively, and that brought in pretty much all of my tenant first business was through Google ads. And the nice thing is it was so cheap. I think, well, I limited my budget because I didn't want too many people at once. Since you're going out and getting a mortgage on the property, I found that even doing 2 deals at the same time was a little bit much for me personally. I know some people close on 7 houses in a week. Now I honestly don't know how they do that. It's not for me. So 2 deals at a time is the most I'll do. And one nice thing with the pay-per-click ads is that you can, oh, I'm going on vacation, I'll shut off my ad for the couple weeks beforehand. So it's nice to be able to monitor and meter everything. So the Google AdWords campaign that I used, it was so simple. It was rent to own, choose your home, get into your dream home now. And then, of course, the link to our website. And then in ads, more like where you have more space, like on your Facebook page, or ads that you're putting in rental sites where it's 123 Main Street. And so just a generic property. And I always used photos of a property that I had, and then just generic, a nice plain vanilla one. And then the generic details. For instance, I think the rent I used was $2,400, because that's often, at that time, that's often what the rent would be for that particular house. So I try to keep the details generic, but sort of accurate. And then, why rent when you can rent to own? Get into the home of your dreams sooner than you ever thought possible with our rent to own program. No credit, bruised credit, no problem. Almost anyone can qualify. And of course, we have a website where these ads direct people to go to get all of their questions answered and all of their details. But, excuse me, and one thing about a website is that it does add legitimacy to your business. I mean, I don't know if you've ever come across a company and thought, oh yeah, I want to find out more about them, and they have no website, and you're just thinking, really? You have no website? Are you even real? Is this a scam? And as I said, it gives all the details on how rent to own works and frequently asked questions. So for those people who actually like to do a bit of research before they pick up the phone, then they can find out if it's right for them. Now, my first website was not even searchable. You could not find it on Google because it was a do-it-yourself website because we have Shaw Internet, and I think a lot of the internet providers give you free websites. Well, but so you can have the website, but people would have to know the address in order to find it. They would have to know the company, at least the company name. They'd have to know the company name or my name in order to be able to find it through a Google search. So it was not findable through Google. And so that's why I needed the ads to direct people to the website. Now, if you Google my current website, if you Google rent to own in Edmonton, I'm going to pop up. But it doesn't, you don't even need that. And doing my first website, it was so cheap. Well, it was free, and it was really easy through the template, and I had the time, so there you go. But websites you can get done professionally for quite cheap if you go to something like Fiverr. For my current website, though, I went with somebody local because I like to have a door I can knock on if there's trouble. And it was way more expensive, but it's already got all the proper SEO terms, SEO parameters and all of that, search engine optimization. It's got all of that built into it. So even though this website was done, oh goodness, over 10 years ago, it still is right at the top of Google because it's just been set up really well. And here's the rent to own landing page for my current website. And yeah, you can go check it out. Actually, should put the link in here. Yeah, any questions?
Yeah, what is can you give me just when you say it was expensive, what is the ballpark pricing on that for?
It was a while ago. It was, I would need to look that up. It was
somewhere between 500 and 1,000, isn't it?
Pardon me?
Something like that.
Pardon me?
Isn't it somewhere between 500 and 1,000? Somewhere in there?
Gosh, no, I paid way more than that. It was somewhere, it was at least 4,000. and I can't remember exactly. I would need to look it up. But yeah, I paid a lot for it. But then again, I have multiple pages. You don't have to have, because I'm doing buying houses and selling houses and joint ventures and whatever, it's all on one site. So if you're getting a simpler site done where all you're talking about is rent to own, here's your questions answered, it's going to be less. So it might only be $2,000. But yeah, as I say, though, you can start with something really cheap. It doesn't have to be, so you can get somebody from Fiverr or wherever to do your site for really cheap if you don't need it already set up, search engine optimized. If you're having people being directed to your website through your ads, then yeah, you can have a cheap do-it-yourself website. You do not need to spend money. And I didn't right away. I didn't want to, because I had the time available. I did it myself and it worked great. It answered people's questions and it was a place for people to go to see who I was and what I do. And then, and it was cheap, or it was free. And then once we were, heavily into the business, then I had the money to invest that I could pay to have a really awesome search engine optimized website done. So yeah, I made the money before I spent the money.
Yeah, and when you talk about the $4,000 website, that's the one we're looking at here, right?
Yeah.
Yeah.
Yeah, and then, oh, this is really cool. I love this part. So this is the FAQs, obviously, but it lists so it's an accordion page, and it lists all of the questions. And then when they click on them, then it expands and they get to see it. And at the time, I mean, this is really common now, but at the time, not a lot of people were doing something like this. So yeah, that's why. And you know what? This same website may even be cheaper now than it was when I got it, just because of how much things have, come along in the world of technology and everything. So yeah, this same website right now might only be $2,000. Okay. I might as well answer these questions here. Have I ever used virtual staging? No, because as I said, people seem to have a mental block with the whole idea of, well, actually, even we have photos of a property staged, and then we found tenant buyers for it. That didn't work out. That was one of our failed ones. And so then when we were remarketing the property, wasn't staged anymore, but the photos were staged. And when people would show up, they would comment on it. So that's the impression that virtual staging gets. Oh, the photos are lovely, but now they get there and they can't picture it. And the whole point of staging a property isn't just to make the photos look pretty, it's to have people picture themselves living in the property. And have you ever done rent to own with pre-built buyers? So on pre-built condos or pre-built houses? Well, no, I haven't. I've done rent to own on brand new homes, but already built. So spec homes, show homes. Yeah. And all right. So your tenant first realtor, there are some specifics with tenant first. Of course, there still are eyes and ears on the property and alerting us to anything potentially weird about the property, and they're protecting our interests in doing so. Like I said, that property with the caving in foundation, that's not what we're looking for. So we definitely need them to have certain parameters, to be looking for plain vanilla, and to make sure that the property is suitable for our inventory if we get it back. So we're going to have a good discussion with our realtor ahead of time to make sure that they know, okay, we definitely don't want executive homes. Or we definitely don't want, well, actually for me, a perfect example is I do not want an older home in my inventory. Been there, done that, won't go down that road again. And so if somebody is looking, sees a property, oh, it's this lovely character home from 1920. Sorry, no, not going to happen. I don't want that home back in my inventory. So the realtor needs to know that, no, we have to stick with homes that are, let's say, less than 30 years old, whatever you decide. And the realtor should be able to give you a good idea of resale value for both you and the tenant. So it's important for us in case we get the property back into our inventory, but it's important for the tenant because eventually they're going to be buying this property, and they need to make sure that that sale value is there for them to buy the property. And likewise, the potential for the future, because 10 years down the road, they're going to be selling it. And we want to make sure that we're setting them up for success. So our realtor in tenant first helps us to ensure a win-win for both us and the tenant. And that is all we have for today. So any questions? Yes.
Do you have any? Oh, go ahead.
So you mentioned that it's safer to include the refundable portion of the option payment. And I was just curious, if that's mandatory or why that makes it safer.
You mean safer to include the refundable portion written on the contract?
Yeah,
Yeah, we have to write it out on the contract because it's a requirement of CMHC that it be.
okay,
So if the tenants have less than 20% down, then they're going to go through one of the mortgage insurance companies, and it is a requirement that there be a refundable portion. And if your contract does not have a refundable portion or a statement of how a refund might work, then they'll kick that contract out. And you'll have
Okay.
to and in fact what they'll because the first time I encountered this was our very first rent to own deal. See, this is why the contracts that I have are built on experience.
Mhm.
So it's important because we submitted the contract, and the CMHC kicked it back. And what we had to do then was make the entire option payment. We had to write an addendum making the entire option payment refundable.
Okay.
So
So you're
yes.
protecting yourself from having to refund the entire option, kind of.
Yes, and you're making it easier for CMHC to approve the deal.
Okay, so most of the tenant buyers who aren't putting down the full down payment, then they will be going through CMHC, most likely, or a company, insurance
Yeah,
company like.
CMHC, Genworth, and I can't remember the other one right now. But yeah, there are three mortgage insurance companies in Canada, and if they don't have 20% down, then they have to go with the insurance. Yeah.
Okay, awesome, thanks.
Okay, and Daryl, you had a question.
Yeah. How about the neighborhoods? Do you have a particular preference around neighborhoods and distance from schools, that kind of thing?
Distance from schools, I'm not really that concerned about because at least in Edmonton, because there's always a school reasonably close. And if there's not right now, then they have plans to build one. So distance from schools, not so much, but yeah, that is a consideration for being close to something is important. Because, for example, when we had one property that we picked up on agreement for sale in Chappelle Gardens, that's a newer community in Southwest Edmonton. Well, at the time, there wasn't, and I did not know this, there was not even bus service to that neighborhood. So then when we just got it as a regular rental, we picked it up with a longer term agreement, but we had trouble finding tenants for that property specifically because there was no bus service. And yeah, so you do want to make sure that you're close to something, and having an idea where your proximity to good transit, that's a good one. So yeah, you should have that discussion with your realtor to find out if there's anything weird like that. Oh, and also with the Chappelle Gardens, it was so new. All there was in the entire neighborhood was houses. No food, no gas station, no grocery store, and no bus. So yeah, not an ideal situation. And as I say, finding even regular tenants for it was a challenge. Oh, and the other thing with neighborhoods is you want to make sure that you're in a B neighborhood or better. You don't want to, because people might fall in love with a property. Now, keep in mind, these rent-to-own clients, most of them are first-time home buyers, and some of them have not even rented many places before. So they may not be familiar with the neighborhoods. And so you need your realtor to steer them away from and not even give them options for properties that are in lesser quality neighborhoods, because that is not something that you want back in your inventory.
How about,
Anything else? Sorry?
how about the size of houses relative to the other houses in the neighborhood? Is
Well,
that-
again, that's part of plain vanilla. So you want them to be similar in quality and size and features to the other houses in the area, and or even, you know, a step above. But buying a step above, sometimes you're just paying extra for no reason. But yeah, if the value works, then great. You definitely want to be. You don't want to be a super fancy renovated brand new house on an ugly street. So that's not going to do much for your future value. Any other questions? Yep, Calvin.
So you mentioned also about proving your intentions when you're doing the tenant first model. And I'm assuming do you prove that with the contract that you have with the tenant
Oh
buyer?
yeah. Yeah, with tenant first, because you're buying it with an option agreement in place and a lease in place before you even buy the property, before you even close on it. The intent is clear right from the start that because your option agreement will say, and your lease will say 2 years. So it's clear that you have the intention of selling this property within 2 years. So that anytime that you're planning on selling a property right away, it's considered a flip.
Okay, and then that would be also active and not passive income.
Yeah. Yeah. And the thing now, of course, if it's in your personal income, it's going to count as regular rental income, because there is no such thing as active income in your personal taxes. It's only in corporate taxes that this makes a difference, but
Okay.
it makes a huge difference. And so if you are planning to do lots of these as a business, well, and in saying that, it's I mean, it costs a few $1,000s. It costs, no, not a few thousand. Let me think. It's been a long time since I incorporated. We had it all done professionally by lawyers. So rather than a do-it-yourself kit, because I didn't want to do that. And we actually have 2 corporations, one holding company and one operating company. So our system is a little bit more complicated and expensive to set up. But I mean, it's less than $1,000, as I recall, to set up, to have your lawyer set up the corporation. And even if you were just planning on unloading your portfolio, I've got 10 properties I want to sell, it could be worthwhile incorporating just for that, because if you are selling, no, wait, you would have to already own them in your corporation. So forget about that. It's yeah, you would already have to own them in your corporation or transfer them over. So that doesn't help. But yeah. Yeah, so forget about all that, because that wouldn't help. But if you are just going to do a few tenant first rent to owns, I mean, I don't know at which point it becomes
Worth it to
incorporating.
incorporate.
Yeah,
Probably,
see,
I could imagine maybe even 2 a year could be beneficial to be incorporated.
and it would really depend on your individual situation, because if you're already near the highest tax bracket or at the highest tax bracket, and then you add a property sale to that, and you make that $60,000 or whatever it is in 1 year, and it's kicking you into the next higher tax bracket, you're going to lose a ton of money on that. So that's why it always depends on your personal situation. Now, if you're in a really low tax bracket, then it might not ever matter, because oh, sure, it kicked me up to the next one, but it's not really going to make that big of a difference. Whereas, yeah, if you're in a higher tax bracket, it could make a huge difference.
Okay, yeah, that definitely clarifies that a bit. And then you mentioned something about the proceeds of sale. The income isn't taxed with capital gains. And I'm not too sure what you meant by that
Yeah,
exactly.
Okay, so when you sell a rental property, a regular rental property, then your proceeds of sale are taxed as capital gains. So
Mhm.
you get taxed on half the gain, and it's at whatever rate. I don't know, and that's again that's going to depend on partly on your tax bracket,
Mhm.
because assuming it's in personal. But when you're doing any kind of flip, then all the income from that property, including proceeds of sale, is taxed as income rather than
Mhm.
capital gains.
Okay, and is that applicable to both strategies, property and tenant first, or?
Well, as I said, with property first, so if in property first, either you're getting the property, for instance, you might pick up the property as a smoke and deal or seller financed, and you immediately do it as rent to own with
Rental?
multiple occasions, because rent to own is my favorite exit from buying a property with seller financing. So often it's right from the start, it's going to be all active income. But if it's a property that you have owned for a while and it's been a regular rental for a while, and now you've decided to sell it with rent to own, it's already in the passive income stream.
Mm-hmm.
So, and capital gains. So you should just leave it there rather
Yeah,
than
because
trying to
it's
change
overcomplicating
it up.
to,
Yeah.
okay, so that kind of answers my other question, I think.
And well, and chances are too, actually, yeah, this clears it up even more, because if it's a property you've owned for a while as a regular rental, then your intention from the start was regular rental. If you're just
Mhm.
saying property first, rent to own as an exit, then it doesn't change anything about your original intention of the property being a regular rental.
Yeah, okay, so in terms of incorporating, then you wouldn't want to obviously pay land transfer fees to switch your current properties, but it's still a great exit regardless to exit out on maybe like a dog property or something.
Now, as far as that now this is getting complicated, but as far as that crossover goes from personal to corporate, there are two properties that we have had that we bought in our personal name, but we bought them in trust for our corporation. So this all happened right from the start. It's
Okay.
not we've owned it for 5 years and now we're putting it in trust in the corporation. We bought in our personal name. So one example is
The property is a beneficiary of the corporation or reversed. The corporation,
the corporation benefits from the property. Yeah.
yes,
So
yeah,
they basically own the rights to the property, even though they're not on title.
okay,
And the first time that we did that was because we were in the process of incorporating when we bought the property. So we bought the property in our personal names and then in trust in the corporation. So we were taxed within the corporation.
mhm,
We owned it beneficially in the corporation in trust, but it was actually our personal names on the title. And
yeah,
then another instance of that is a property that we bought where we wanted it in our corporation, but the mortgage that we wanted, we could only get in our personal names because we wanted a home equity and attached to it.
okay,
And we
awesome,
could only do that in our personal names. So we bought the property and got the mortgage in our personal names and had it a trust document up at the lawyer when we bought the property. So again, this is all happening when we bought the property, that this all gets signed up with the lawyer. And so we own, our corporation owns the property via a trust.
okay, that's awesome. So you wouldn't really do that with a property you've been sitting on for a while?
No.
Okay,
Yeah, that would definitely be frowned upon, and you would have to do a actual transfer for that
yeah,
if you've
that
owned it
makes
for a while.
sense.
Yeah.
Awesome, thank you so much.
Anything else?
Have you ever seen anybody use the GPLP model for setting up their,
The what model?
you know, where you have a general,
A
basically
general
a
limited,
limited partnership set up. So
Um,
you you're the GP, you're the general partner, and then your investors are the limited partners or whatever.
No, I might consider doing that for multifamily, but I wouldn't, and I know some people do set up different corporations with different joint venture partners. I don't want to do that. It's unnecessary complication in my opinion, but we did offer it to one of our partners because we have one partner who at one point had over $1 million invested with us in multiple properties. And so when it was, I don't know, property number 4 or something like that, I offered that if he wanted to start a corporation for further investments so that he could choose when he's getting taxed personally, because that's the biggest benefit. One of the biggest benefits to having these properties in your corporation is that you get to choose when you're personally taxed. And as I said, the corporate tax active income is 14%, and it doesn't matter how much money you make, so it doesn't matter how many properties you sell that year, and then you can pull out, you get to decide how much you're officially pulling out and declaring dividends and salary and getting taxed personally on. So we offered that, but he was happy just staying with the joint venture and in his personal name, which I thought was really silly in his case, because he already had an active business. And so he was getting income from that. He had rental properties in his own name that he had operated for years. He was getting in, so he would just be overloaded with the tax burden. So it's kind of silly, but no, I just stick with joint venture partners for most projects.
All right, just one more question. In terms of rural kind of communities, have you had any problem with working in those areas, like say a Brooks or something like that?
I think the smallest, because we've done Fort McMurray, Grand Prairie, Medicine Hat. Oh, the smallest we've done is Glenbrook, which is about 20 or 30 minutes outside of Bonnie. So Glenbrook is teeny tiny. And Bonnieville is a good sized town, but still just, well, no, actually it's kind of small. It's kind of small. But so that's the nearest town, and it's about 20 or 30 minutes away. And then Cold Lake is another, whatever, half an hour away from that. I can't remember all the numbers, which is funny because I go camping at Cold Lake all the time. But Cold Lake is a major employment center, even though it's a small place, because there's oil and gas and the military base. So, and the housing was getting so expensive there, and it's not a really pleasant place to live. I have friends who does a lot of, who has rental properties there, and there's constantly incidents and break-ins and everything. So people were starting to move who worked in Cold Lake, they were moving to Bonnieville, and then Bonnieville was getting too expensive. So then they were moving to Glenbrook. So it really depends on the situation. In this case, because normally I wouldn't be working in a town, because this is, like I say, teeny tiny. Normally, okay, fine, Bonnieville, I can work there. Glenbrook is too small. But in this case, because it's basically a bedroom community, just further away than your normal bedroom community. So yeah, when you've got a bunch of people living here and working there, it's worth considering. But the big key is the economy. And because Glenbrook was attached to the Cold Lake economy, it made it viable. So that's your big key, is what's the economy like? Where are those people working?
Right, and then I guess the financing, or whether the bank will give you a loan for that kind of area, or
yeah, well, no, they had no problem giving the loan, because it was, yeah, there was this little mini boom going on in this little tiny place, lots of new stuff. But the bigger key is for you and your security is to get a huge option payment, because anytime you get anything a little bit off of normal, the
right.
bigger option payment is your security that is going to help ensure that the tenant does the deal and goes and is able to buy the property, and is your cushion in case they can't or won't or don't.
Right.
So, because if I got this property back, there's a, it's a really small community. I would, in my mind, my first thought is I'm going to need to discount this property and sell it through a realtor. So there's 40 grand gone. So I need a big chunk of money up front to cushion that, to basically cover my discount and my realtor if I ever get this back.
Thanks.
All right, I think that wraps it up. And I will, well, next week for, darn it, I can't remember what the session is next week. It'll be a surprise. All right, bye everyone.
Bye. Thanks.
Bye-bye.
No, it didn't work. Oh, my fancy button. I had it all set up. Oh, it didn't work. Okay, here we go.